In 2013, it'll finally be the year where we start to see some concrete recovery, if you like. There will be 4 key trends that we're going to see this year. The first one will be that the backlash against austerity will gain pace. So countries in the developed world who we previously saw embrace austerity will turn against it because they're living to regret it now. Growth isn't getting back to pre-crisis levels quite yet. And other countries will shun it completely because they can see what's going on in the other developed economies who've pursued it relentlessly. So the second trend that we're going to see will be the emerging markets turning inwards towards their own domestic markets and basically trying to make up for the shortfall in demand from the developed economies in the Western world. Now, we'll also see the emerging markets trade more with each other as well to take advantage of their burgeoning consumer markets and growing real wages. The third trend that we're going to see is the commodity markets going through a period of evolution. So what we're going to see is a lot more resource nationalism. Basically, countries are going to try and be more independent in terms of energy, particularly because of the unrest in the Middle East and North Africa. So we've seen the USA embrace fracking, which is quite controversial and environmentally harmful, but they're doing this on their quest for energy independence. And we've also seen Russia say that they're divesting all of their state-owned enterprises, but basically they're just going to hang on to the energy enterprises, streamline it and focus more on that. The trade export growth will slow and continue to slow, basically because of ongoing resource nationalism as countries try to maintain energy and food security for their own countries. We've also seen weak export demand continue in 2013 from the developed economies for goods and services from the developing economies. Now, 2013 will also be a really big year because it's actually the first year that the emerging market economies will account for more of global GDP in purchasing power parity terms than the developed economies. So it's a big year for them because it's a continuation of the balance of power shifting from the developed economies to the emerging economies. So this year, emerging market economies will account for 51% of global GDP in purchasing power parity terms, and the developed economies will account for just 49% of global GDP in purchasing power parity terms.